Hi everyone. It's Wednesday, the 2nd of April, excuse me, and it's Trump Tariff Day or Liberation Day, as he is like to name it, and his confidants and his followers and his believers like to confirm it. Apparently, there's meetings going on now. There's three potential options on the table. He's obviously got Besant in there and Lutnick, his two key secretaries that have been involved in this, Commerce and the Trade Secretary. So let's see. The markets are very much jittery, very much on standby for what may come rather than what may not come. At 8 o'clock tonight, GMT, 2000 hours GMT, Universal Standard Time. From the president from the Rose Garden outside in April. So see what he's got to say. This is the calendar here I've got from yesterday. Remember, markets are really, really jittery. We saw that manufacturing data yesterday across the board, really. You know, particularly in Europe, was very, very weak. We had a miss also in the US later on in the day, didn't we? Here, 49 for the headline PMI data. Remember, PMI data is looking forward. Again, the other thing we said yesterday was this hike in prices for manufacturers as well. So adding to the conundrum about higher inflation, lower growth, which the Fed and obviously the government have to grapple with. And then there was the miss for openings as well, job openings, JOLTS. Remember, JOLTS is not just job openings, but also, let me make me a wee bit smaller. You can see, there you go, see the calendar a bit better, hopefully. So it's people changing job as well. So JOLTS measures the change as well, not just job openings. So that was weaker again, as we saw as we looked at the graph as it was moving down. And then the other point I drew attention to on our Discord discussions yesterday was the tip number as well. That was the weakest for many years as it came in. Optimism. So this is obviously sentiment capturing how people are feeling, businesses are feeling about going forward. And again, it's back under 50. It's negative. It's expecting contraction. So the expectation of inflation getting stickier and moving higher. Some are talking about 3 or 4% by the end of the year. And the impact on growth on not just the tariffs, but the reciprocal tariffs that are coming in today, and how big they are. Is it going to be a flat against everybody? You know, some of the developing markets like India have very, very high tariffs on US goods, others less so. The major trading partners, the EU, are talking about, both von der Leyen was talking about. Let me just quote here. What was she talking about this morning? Yeah, we have strong plans to retaliate. So a series of plans rather than just one plan, depending if there's a flat tax against all EU imports. Obviously, he's focused on wines and champagne in the past as well. Obviously, cars, particularly German cars, but you know, the big German manufacturers also make cars in Europe to export to the US, but they also make cars in the US that they export in China and Mexico, and the US, which they export to Europe as well. So all sorts of things in the mix, and that's what markets hate. Markets hate uncertainty more than anything, and that's why we've seen this move, particularly in the stock markets. We look at the stock markets yesterday, they were sort of a bit mixed yesterday, but look at the S&P, the world's most important stock market. That's the hourly chart. We look at the daily chart, you can see big old sell-off, as we've talked about many times before, from our high in mid-February to testing this new the November low we went down to at 55.33 just on that final trading day of March. We were up a tad yesterday, S&P 500. It was up 21 points. We closed at 5633, the cash market, but futures are down again this morning. Look at the hourly chart. You can see we've drifted lower from the open this morning as the S&P, Nasdaq. Similar, virtually a copy chart to the downside, and the Dow extending lower under its 50-hour moving average to the downside. Just while we're on stocks here, the UK market also down today, and the wider Euro 50 stocks, they very similar move from a rally up yesterday into the 50-hour, and a drift, well, not just a drift, a move lower in anticipation of what may come later on today. The DAX is more of an exaggerated move, as you might expect, much more vulnerable potentially to stronger tariffs, particularly, I say, on cars and the major German car manufacturers. So 22,000 is just 200 points away again at the moment for the DAX today. So stocks, moving lower. Consequently, we've seen a bit of a bid on the safe haven currency. So if we look at the dollar Swiss is sort of cancelling each other out. We took a short position on this last night, and it's really gone nowhere. I might close it out because it's a bit of a scalping one, so flat on that. The sterling move was the opposite way around. That's gone against us. That's out of the money at the moment. Again, I might close that one out. We were looking for the dollar to pick up against the sterling. Euro, on the other hand, has declined today. We've moved lower. But again, it's sort of into its 50-hour moving average at the moment. So really, it's in the last hour ahead of this, what would be normally key data, the ADP payroll data. We'll come to that in a minute. But everything has been subsumed by tariffs, and again, it would be interesting to see if there's. I don't know if there's any questions from the press this afternoon. I think it's just a statement from the president. His press secretary yesterday was very adamant that this is taking place. He talked about a golden age of American manufacturing. So all this rhetoric about making America great again, repatriation of US manufacturing jobs. But as we saw yesterday, those manufacturing PMIs remain very weak in anticipation of that. Lagarde this morning in her key speech talked about, it's bad for everybody. Ms. Lagarde was speaking this morning. Hang on, let's get on to today. It's not actually on there for some reason. Oh, well, she was speaking this morning, trust me. And she talked about negative for the whole world over, was a very eloquent phrase she used this morning. Sorry, excuse the top of my head. But see how other countries respond. Japan was apparently in last minute calls to the president last night. Sir Keir Starmer in the UK was also in touch with the president the day before yesterday, and also yesterday, trying to see something alleviate the pressure on the UK economy. But we will see all sorts of things going on. China this morning have announced restrictions on Chinese companies wanting to invest, and that's been going on for a few weeks. Bloomberg broke that news this morning. It's been confirmed that China has been for the last few weeks restricting, giving orders, official export licenses to Chinese companies wanting to invest in America as well. So that's been sort of put on hold. We've had this obviously political stories as well yesterday in the US. Still got 5 minutes where. There was two members in Florida, two members of the Senate getting up for re-election because the two members that one was Gates that had to stand down as his potential Attorney General, Trump's new Attorney General, and so that made a vacancy in the Senate. And the other one was Waltz, yeah, the guy that was in the crosshairs last week, also his replacement. And I mean, very, very strong Republican areas within Florida, counties as they call them, big strong red areas where they won by I think 25% and 30% margins, those margins were reduced very, very significantly. Obviously, it's people didn't probably haven't bothered to turn out to vote, so it's how much you can read into that is very questionable. Obviously, because the strong Republican areas and the state is used to be a swing state, but it's very much a Republican heartland now. But that's perhaps an indication of the pressures that the anticipation of inflation more than prices going up again on goods, which we're starting to see, as well as services in the US. The anticipation of that being, start worrying people. And then the other thing was there was a judges positions being available in let's put the charts on rather than the calendar. In Wisconsin, and that actually went to the Democrats. So that was a big, not big surprise, but it was a very finely balanced judicial system there. I think it's 4-5 or 3-4. I think in favor of the more sort of left-leaning or not anti-Trump, but the independent judges. But the key thing there was that Musk was in there spending billions, not billions, but millions. Excuse me, 20 million he spent in Wisconsin. A judge called Susan Crawford got re-elected. And he talked about $100 for people, giving people money away, basically his PAC, which you're actually allowed to do in the US, if people have signed something against activist judges, as he calls us. And he gave another two $1 million checks away to people that were agreed to be photographs taken with these situations. He talked about being the big, what's the word to use here? Again, I've wrote this down here, so excuse me. Might decide the future of the US and Western civilization. So really ramping up that Trump type speak, and Musk is very much into that as well. So, but that again went back to the Democrats' way. So a couple of flies in the ointment, but you would expect that, given that the uncertainty around these tariffs and the impact on a lot of normal working people in the US. A lot of voters that went with Trump are a bit surprised with some of the smaller farmers, a bit surprised with some of the impacts that and the cuts to federal jobs that's impacted some of the Trump heartlines, bizarrely, because not all federal jobs, government jobs, are actually in Washington. Are spread around the country quite significantly, and some Trump heartlands have been hit quite hard on that. Anyway, enough of the politics. Let's have a look at what's going on today. We've got in a couple of minutes we have the key data of the day, economic data of the day. Where am I? This calendar. Here we are. ADP 118,000. From 77,000 last time. So it's been around about 150, 160,000, the ADP. Remember, the correlation to non-farm payrolls on Friday has broken quite significantly. There's very little correlation now. I haven't actually done I haven't read analysis on that recently. I haven't done any of my own analysis for a while as well. But I should do that and see what... and see if that is still the case. But as we just look at the other calendar here, I brought this up earlier. This is the from Forex Factory. You can see, it's fairly, fairly comfortable around private payrolls, sort of steadying out around about that 160 level. So although it's expected to pick up from the big relative miss last month. We'll see if this is really... we're into April now. Are the Trump policies starting to bite in the jobs market with anticipation of higher inflation? Is it impacting hiring? We'll see again tomorrow with the weekly claims, the new weekly claims. That doesn't seem to have been impacted. How does it? We're still around that 220,000. We had that one week where we did jump to we did jump to 240,000, but we haven't seen a significant impact. Although the talk continues, the signs are that we are seeing some cracks in that labour market. And again, a non-farm payroll on Friday, particularly that U6. Remember, unemployment number widening. U6 is a much wider measure of unemployment in the US than the U3 measure that everybody highlights. So ADP, and see there it's about to break 155,000. So that's a much better number. So we've come in here back to see these areas here. About it's about average what we've been. In fact, if anything, a bit better than average for the last 12 months, really. So that's a positive sign. For the president and his announcements that's coming later on today. So that should have perhaps perked up the the sagging stock markets, but we'll see. Euro reacted virtually into the 50-hour. That's the hour. If we look at the 5-minute chart, I guess that would have turned also lower. There we are. Let's make that a wee bit bigger. There we are. So there's the news into this 108 area. Which we've been having a go at today, but we're lower on that data. See our calendar. Just update that as well. Oops, went too far. I went to Thursday. It's only Tuesday. So here we are, 155,000, much better than expected. Last month also upgraded to 84,000 from 77,000. So yeah, good news across the board. That really from a jobs perspective. See what tomorrow's weekly. As tonight, see what tomorrow's weekly. I'm just moving down. Initial claims here, 220. That's again, as I say, that's last week was good, and it's expected to be the same later on. We have got some sort of lesser significant durable goods numbers as well later on this afternoon. Sorry, where am I? So many things on here. Wednesday. And they haven't here on why isn't it on here? We've got durable goods later, haven't we? Sorry, down here. There we are. Durable goods later on as well, and factory orders will be quite interesting as well in an hour's time as well. So watch that one later on as well. Factory vehicle sales numbers came out yesterday as well, and they've been sort of but stronger than many had expected, really, in the US as well. So again, this continuous sort of mixed messages that's sitting around the US economy, but the bias certainly is the potential for higher inflation on the back of the tariffs and the disruption it's going to cause to supply chains potentially, and if it's going to be a blanket 20% or whatever it's 15%, 17% or whatever the numbers are against all reciprocal trading nations with the US, or is he going to target the dirty dozen, as they were calling it a few weeks ago, the 15 or the key major countries that that really do slap tariffs on US goods, or is it going to be based on the size of the trade that's done with each of these countries? Obviously, EU, China, Japan, the big trading partners, Canada, Mexico already in line, already tariffs on aluminium and steel, and Mexico, as I say, and Mexico and Canada very much in the crosshairs as we go forward. So yeah, Liberation Day, as the president has like to call it, is here, April the 2nd. See if this chaos continues or there's some sort of clarity. What is the actual numbers going to be? How's it going to be applied? That's the other thing that happened that they had big significant problems with last time in 2018, 2019, was actually collecting these tariffs and who was paying them. This massive purge of the federal employment base, how's that going to play out on that as well? Who's going to be doing this? Where are these tariffs getting placed? Who's actually paying them, and when are they getting paid? And obviously, ultimately, it's US businesses, it's US consumers that will pay these higher prices, and that's why we're seeing this sentiment of higher inflation into year end at 3 to 4% rather than the target rate that the Fed are looking at, obviously down to 2%, and it's coming back into goods. Remember, goods inflation collapsed really very, very quickly, but we'll see. Obviously, the world loves to trade. Trump loves to do deals, so we're caught between: is this just a pure negotiating stance? It doesn't seem to be, or is it? Is this the real deal? Set to remain in place for a while, and that could be the other key issue as well. Could really have a significant drag if he's really going to focus on some of the countries that have these big trade surpluses with the US, like obviously primary being China. But where do their goods then go? That's the other impact that what the other trading zones of the world are looking at. But at the moment, everyone, friends and foes, if you like, of the president remain very much, we have plans in place, and will retaliate accordingly. So it's not good. It's a drag. It's friction on trade. It's a drag on global growth, and the US could be suffering quite badly. People have talked about average US families suffering $2,000, $1,200, those sort of phases. In the UK, there were talked about a potential hit of a few £100 on this particular situation. But lots of chatter in the UK of actually being treated quite kindly, potentially. But expectations are, it's simple just to do a blanket ban, a blanket tariff, isn't it? But that might be, I think there'll be some nuance between a general for countries that have lower trading relationships with the US, and some of the big ones, these 15, might be targeted a bit more directly rather than per sectors. Last time it was particular products, wasn't it? So anyway, it's all just circumspect. I'm sure they're all scratching their heads at the moment. I say Lutnick and Peasant and the president himself, I should be up with his Big Mac breakfast and his Coke or whatever it is he drinks. So all waits. 8 o'clock GMT, 2000 hours GMT. It's 10 o'clock in New York and Washington. 9 o'clock here in London, and 2300 hours server time on our trading platform. Anyway, let's have a look at the markets. What's going on today? So I say it's really a wait and see. The initial reaction to the ADP was a move lower for the euro against the dollar, but that's the euro's come back again here. So 107.96 is the move lower. Again, careful. If you're trading this intraday, let's have a look. What were we looking at? This is that yesterday? That was yesterday. Yeah. So yesterday, actually, let's have a look for you. Where are we? Let's put this on for a quick chat. So there we are. It's sort of sideways action, really. Pivoting through 108. The 50-hour has become key into it. It rejected it, back into it. So a break over here to take this higher, 108.3. Really, again, be careful. Trying to trade today ahead of this announcement, my friends. So euro's up a tad, really. The low, I'd just if you were looking to trade at 8 o'clock, I'd measure where we were, the highs and the lows of the day, and see if we get close to those on this announcement. See if it disappoints. It's unlikely to disappoint. There's likely to be volatility at 8 o'clock, so that might be the time when people are keeping their tinder dry for then. Meanwhile, our short sterling, I'm going to close that out now. 129.44. I'll do that after I've just switched off here. So that's a losing trade, and the Swissy is actually in the money. Is it? Yeah, it's not doing anything either. I might leave. Let's see that they're counteracting each other. The Swiss franc and the US dollar, both sort of in demand in this safe haven situation. Gold continues to rally. Treasuries continue to rally. The 10-year yield yesterday, I noticed, went to 4.13, 4.13. It was 4.35 not that long ago. It's had a big old move down as treasuries themselves have become in demand. So remember, the yield on the treasuries is inverts to the price. So the demand for treasuries has gone up. So the prices have gone up, whereas the yield has come down quite significantly. 10-year one, four. I've seen it here on 4.13.45. So it's ticked up a little bit, but it's still down on the day. The key US 10-year treasury. So so quick look at other markets. So crypto in line, removing really with the dollar as well. So we had I should go back to the day. Bitcoin had a good day yesterday. Big, strong, positive candle, taking out the uncertainty of the previous 3 days. So the bias to the downside is sort of cooled somewhat, but we've moved back down again today at the moment. So the 20-day moving average, very, very flat here. We can't move away from it either up or down. So the big line in the sand I would now look at would be that 50-day moving average around about that 88,000 level to the upside. And a break down to test these lows at 78 and 76,000 to the downside. But at the moment, we need to break higher above the 20-day moving averages. This is going to go up, but the flatness of it shows the lack of direction. So this leg up we had has cooled and rolled over again. So again, it seems to be biased to the downside, if anything. On an end of day basis, the Bitcoin chart, we're under these two. That trend has broken. This trend up here has broken. We come back to test it and coming back down. So the bias remains to the downside. So the next downside target would be this low from this morning and earlier this week at 82,000. And then we could have another test below 80,000 itself, but 84,600 is where Bitcoin trades currently. Gold, the other key asset to actually do these in order, I suppose. Oil holding the key $70 level, having had a strong day on that final trading day of March. We were down yesterday, although we did spike to 72.20, so we were over the key 72 level area, but the more important $70 level holds so far, and the break of the 50-day moving average is also holding, and the break over the 20-day moving average is now into our 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th day higher. So a nice move up here for the 20-day moving average would take us higher, but the resistance sits at 73, having tested 72 yesterday. So you can see that resistance there where my chart line is, hopefully at 72 for US oil. Indexes we had a look at briefly, we're still pressured, and gold 3,125 at the moment, or 3,123. We were got stopped out of our moved my stop loss up quite aggressively on the 1 hour time frame. Yes, and we got taken out of that, but we've had a really good start to April at the moment. You got 1,200 points to the good. I think obviously the points numbers, guys, don't get too carried away with the points numbers. It's because there's been a lot of index trades, but the percentage gains have got quite substantial as well. Obviously the forex moves a lot less, but remember when you're trading gold, although we only moved, we moved $50 odd, that's still 500 points on the trading platform. So that's why we use the points numbers. Okay, so but the point is we're positive. We have a system, we have a strategy that works. We get out when it's losing, we let it run when it's winning. It's a trend following strategy. It's always posted, up on here on the trading strategies blog, guys. If you're on Discord, that's where I put all the positions each night as I post them. But as you saw yesterday, 225 points on the Nasdaq, second hit positive. Gold, we had another big hit, and was, as I've written here, we're off to a flying start with plus 550 points for April, thanks to the US indices. And then we had the 500-point winner on gold as a stop loss. Got here. Did I not put that on? Oh, there we are. There's the gold reverse. So here, as you say, there's no target set on this one. This was the here. So another 500 odd points here. So we had 550 points on our NASDAQ winner, second part of the position. And then we had a full position, 554 points, or $55.45 in single dollar terms, if you were doing it that way around. From a lot size point of view, as we moved higher. So from a points point of view, we're 1,100 points to the good at the moment for April, having had a 300-point plus winner on Monday. Obviously, we've got some close though. These two here that are losing, which I might do ahead of tonight. We'll take some 100 pips off that, possibly, but 100 points off that. But anyway, tonight there's. Let me just have a look. Obviously, things will change as the announcement comes in. There's nothing really. We got a pound Swissy potential trade, a dollar Swiss trade again. So that's a follow up from last night. So I guess the dollar Swiss one. Elsewhere, Aussie Kiwi, CAD yen at the moment. Sorry. Let me move that down. Can't see that. Swissy yen, pound Swiss, CAD Swiss. That's all to do with the strength of the Swiss on this safe haven bid. So, but I will post that tonight on there. So let's leave you with the gold market. Interesting, we haven't had another all-time high today ahead of the tariffs. You might expect that, but perhaps we were front running it yesterday. So yesterday's all-time high still sitting at 31.48 for the gold market. Gold currently trading at 31.25, and the euro, the other major volume player for you all, just literally rotating around 108. So hang on to your powder, keep it dry, and see what. There we are. We've over it. So we've moved higher. There's a dollar's weakened here in the last 10 minutes while I've been speaking. So should put that in, shouldn't I? So that is a high of the day, isn't it? So we've put a new high of the day in ahead of Mr. Trump later on at 108.11. So we'll bias dollar euro up against the dollar here. So I will see you tomorrow, guys, for the weekly claims and the services PMIs. Remember, services are much more significant to the US and any developed economies GDP. So tomorrow, let's show you tomorrow. So we got import the weekly oil flows, oil inventories as well later on in an hour or so. But some durable goods data as well in half an hour. But again, really everything's hanging around this. This is GMT, guys. President Trump's announcement rather than speaks. It's just an announcement, and it'd be interesting to see how the press are taken in on that, along with that. So tomorrow it's the services PMIs, same time as we are today, and non-manufacturing PMIs, and the weekly claims that we just looked at a minute ago. Okay, so take care. I say, guys, if you're not with us, do come and join us. We're as open and as transparent as possible. If you want to take on a challenge, there's lots of very well priced challenges, starting from from a $5,000 account. It starts from $55, but there's all sorts of discounts kicking around at the moment. We got our discount at the moment if you're a new trader. So if you put EAD 30 in there. That will get you a 30% discount on any of the products. If you only got $40, $30 gets you in with 5,000. Obviously, 5,000 isn't a great size account to be trading. You can't perhaps take lots of trades at once, but if you're only trading and that's all you've got, why not? It's still a huge leverage company. It's trying to find $5,000 yourself capital to actually invest and trade with, and trade on a one-to-one basis. You can use the leverage of trading with these platforms and just for a few dollars. But a bigger account gives you a bigger lot size to play with. 25,000 is a good reason it's our most popular account. And again, a 30% discount on there brings that down to like 140 for the challenge. And obviously, if you follow the rules, are a successful trader, the targets have tweaked. We moved these down to 8% from 10%. The key ones to focus on, though, guys, are the losses. If you focus on keeping the losses smaller on any of the trades you're taking, it keeps you in play. And the targets, the profit targets will just come along as you're following the process, following a system. And then once you've passed the test, whether it's a 1 phase or a 2 phase challenge, you get a real account, a real funded account. It's still a funded, it's still a simulated account, but it's it's the profits you make are real, so you can withdraw some real funds if you're successful. And once you've done it once and twice here, these 2 steps, there's absolutely no reason why when you get to a funded account, you can't start making some real money. And then, if that process is working for you, you can keep the losses small, because that's what successful traders do. The world really is your oyster. You can then scale up. You can, up to 200,000 accounts and beyond. It's really about how you do that, and the processes that you go through. But it's making sure you're disciplined, you're patient, and you have a system that works for you and fits with your time frame, fits with your lifestyle, and fits with your psyche more than anything. But more on that in our webinars when I talk about trade risk management. So there we are, Wednesday, the 2nd of April. All eyes on Washington and the Rose Garden and what President Trump is going to dish out for the world to deal with. Anyway, see what happens later on. Euro 108 at the moment. 108.8 at the moment. Take care, everyone. We'll see you tomorrow, and the fallout from Trump's announcements and how we play it going forward. All the best, everyone. Bye-bye.